Good morning and welcome to the 80th Securities Markets Update. We'll start our video today with a look at the recent economic releases from the U.S. which were released yesterday. Again, the U.S. economy continued to show further weakness, and most of the economic releases, 70 to 80%, came in whether less than expected, contrary to the expectation, or shockingly weaker. Yesterday is one of those days when the economic release came in far away from expectations, beginning with the Flash Manufacturing PMI, which came in contrary to expectations, declining to 56.3 in July, while it had been anticipated to rise to 57.5. And June figures also has been revised down to 57.3, down from 57.5. And this is the biggest miss on a record. What's concerning here is that new exports weakened, manufacturing production fell sharply, input costs surged, and finally employment component tumbled to 10-month lows. As for the housing data, the new home sales also already collapsed by 20% from May to December of 2012 levels. Yesterday's new home sales came in shockingly weaker than expected, declining by 8.1%, while it had been anticipated to decline by 5% only. Furthermore, and what's interesting, is that May figures has been revised down from 18.6% to 8.3%, meaning that there is a difference of 10%. And the question remains here, how could the data sets be so wrong to show a difference of 10%? Since the beginning of the year, we warned about the current situation, and since the Federal Reserve began the QE, or the tapering the QE, we believe that the U.S. economy is suffering from structural issues and the weakness is likely to continue, while the second quarter GDP is now unlikely to be above 2.5%. As for today, the U.S. session had some economic figures with limited impact on the markets. Tokyo core CPI stabilized at 2.7, despite the fact that it had been anticipated to decline back or to remain stable at 2.8. Moreover, Japan national core CPI fell back to 3.3, down from 3.4 as widely expected. And finally, in New Zealand, the ANZ business confidence fell to 39.7 in July, down from 42.8, which is the fifth monthly decline in a row and the lowest reading since April of last year. As for the European session today, we will be focusing on three data sets from Germany and the UK. The GfK German consumer climate may remain stable at 8.9 in August, while the IFO business climate is expected to decline back to 109.6 in July, down from 109.7 in June. And finally, in the UK, the GDP is expected to show a growth rate of 0.8% in Q2, which matches the same growth rate of Q1 of this year as well. As for the U.S. session today, we will be focusing on two economic data sets, which might lead the major financial institution to cut their U.S. GDP forecast again. Core durable goods is expected to rise by 0.6% in June, comparing to no growth in May, while durable goods orders may rise by 0.4% in June, comparing to a decline of 0.9% in May. However, the figures might come in as well less than expected. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube, to get the latest economic releases, reports, and analysis. Thank you for watching.